There you go. Lovely. Okay. So once again, everyone, welcome. My name is Nate. Nice to meet some of you for the first time. Thanks for coming through to the Sunday study sessions. Sunday study sessions is an initiative put together by myself. So I am not a six-figure trader. Just want to make that abundantly clear. I am not a sapphire who has got a large team beneath me either. I am someone like you who has joined up, has bought the package, and has been studying its contents. I joined the company in September, and I started doing the Sunday study sessions in March, and we are now in June. Yeah, so all I'm doing here today is I'm sharing my experience with some of the newer people, some of the people who are here for the first time and you don't know much about trading, right? Because when I first started, obviously I was given the Shift app, I was given Wow, and I tried to get into it, but I found it to be quite challenging for me to really sink my teeth into and to really get passionate about it. And then we had a training session with Carl. So Justin is my upline and Carl is Justin's upline. And Carl kind of gave us a little training session and it blew my mind. It just really opened the door, busted it wide open for me. And I was like, wow, everything made so much more sense because I heard it from a peer, because I heard it from someone who was, in the same space as me. I had the opportunity to ask questions, and it really helped me to evolve in my trading journey. So the only thing that I felt that was missing from that was the regularity, right? So now that I've kind of evolved, I've studied a lot, I've learned a lot, and I still have a lot to learn. Don't get me wrong. Like I said, I'm not a six-figure trader. I'm not out raking in money as much as I would like to, not yet. But at the same time, I know it will come. And I am here basically to share what I have learned in as much of a condensed format as I can for you guys. So we tackle different subjects every Sunday. So it's not like one thing that we kind of speak about. However, we do rotate around fundamentals. So we'll do like a little crash course which covers everything. Every so often we'll kind of we'll talk about pips and risk management. We spoke about that last time. Sometimes we'll speak about market structure, time frames, things like that. Today, we're going to be talking about candlesticks. I believe I promised someone last Sunday that was what we were going to talk about this week. So I can't remember who it was. I'm so sorry I didn't write down your name, but hopefully you're here. Let me know if it was you that wanted to speak about candlesticks today. Just pipe up and say, yes, I'm in the room so that I know that you've caught it. No? Or maybe you'll come a little bit later. Maybe the person who asked will come a little bit later. Either way, we'll post it in the group chat. But it was specifically requested. It was one of a couple of that I was kind of thinking of running through. But today we're going to be talking about candlesticks. That's basically the theme of the day. So to begin with, I want to make sure everybody understands the basics of the chart, the basics of the pips, the basics of who was here last week. That would help actually. Who was actually here at last week's session? Can I just get a bit of energy? Let me know if you were here last week specifically.
I was here last week. It was brilliant.
Yeah, you caught the pips and risk management last week. Brilliant. Was it just you alone? I'm sure there was a couple of other people here last week. Come on, guys, where are you? No? Okay. Oh, wow, nice. Okay. So we've got a pretty fresh team then. That's all right. I can work with that. In which case, at least that's helped me to know where to begin. So I'm going to start off by sharing my screen. And because I know that the majority of you guys were not here last week, I am going to kind of start from the beginning. Here we go. Okay. So what we're talking about today specifically are candlesticks, okay? But first, I need to make sure you guys understand what the candlesticks are doing, okay? So the candlesticks are these things here, which you see when you look at the chart, okay? The candlesticks measure pips. So what is a pip? A pip itself is a unit of measurement. So first, so we understand what we're looking at, we've got currency pairs. These are our pairs. The ones on the left are called the base currency, B-A-S-E. And the one on the right is called the quote currency. Yeah, Q-U-O-T-E. You've got the base currency and you've got the quote currency. So the base currency is always worth one of itself. Okay, it's always worth one of itself. And the value of the quote currency is determined by this number on the right-hand side. Okay, so in a nutshell, because we're not covering pips today, I'm just running through this roughly so to make sure you understand the candlesticks when we get to it. So you understand it roughly. What this is telling us here is that £1, because the base currency is the one on the left, which is worth 1. So £1 is worth how many US dollars? Well, the answer is here on the right, $1.37. But it's not 1.37, it's 1.37965 or 984, down to the decimal point. Okay. If you really want to break down on each pip and each digit, then have a look at last week's video, because that was what we spoke about. That was what we did. We focused more on the pips and we focused more on risk management, and we spoke a little bit about the spread, and we spoke a little bit about, you know, how to manage your risk and how to count pips and how to, you know, know how much money you're going to earn from your trades and know how to manage your risk as well.
Just a quick question, where they can find the videos from other sessions? If somebody have it, can you put the link in the chat or something like that?
Yeah, it's on my YouTube channel. I'll post it in there.
Exactly, there you go. Brilliant. Thank you, Justin. Okay, and thank you, Emmanuel, as well. Yeah, good point. Okay, so we know we're looking at a currency pair. £1 is worth how many US dollars? Well, we can see that £1 is worth $1.37. I'm going to open up the chart now. Let's go for the monthly view, and I'm just going to spin it sideways. In fact, no, let's start off with the hour view for this one, because I think that makes a little bit more sense, because we're talking about the candles. So each candlestick that we see gives us 5 pieces of information. 5 pieces of information. I'm going to strongly recommend, guys, that you're taking notes for these sessions, because this is what we're here to do. We're here to study, right? So each candlestick gives us 5 pieces of information. So if we take this black candlestick, for example, because it stands out among all of these white candlesticks, right? So if we look at this black candlestick, we can see 5 pieces of information here. What are they? So the first is the direction. If the candle is black, then it means that price went down. If the candle is white, it means price went up. Yeah, simple as that. You can change the color if you choose to. You know, another option that you may see commonly is red and green. Yeah, if it's red, price went down. If it's green, price went up. But ultimately, that's what we're looking at here. One went down, the other went up. So we can see here, down, down, up, down, up, 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 down, up, 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 down, right? And you can see that even though it looks as though it's just going up, it is in fact zagging down and then coming back up again, ever so slightly, right? Because of this black candle here. So that's piece of information number 1. Number 2 and 3 then, right, are that if this candle went down, then we know it started at the top and it finished at the bottom. Yeah, we know it started at the top because it went down, and we know it finished at the bottom, right? Because it went down. So that means we know what number, what the pip value was when that candle started at the top, and what the pip value was when that candle started at the bottom. More specifically, you can use this tool here. Hold on, let me just show you where I got that from. On the right-hand side, you see the plus sign. This tool right here, and you can drag it right up to the top of the candle, and you can see, right, we started at 1.41527, and price went down to 1.41423. Now, this wouldn't have been a little bit easier if the guys from some more of the guys from last week had showed up, and then we could have kind of done the pips together, but no worries, do you know what I mean? No worries. To those of you who, again, don't know how to count the pips, you don't need to worry too much. It's not going to be super important for you to understand what the candlestick does, but I would definitely recommend that you go back and watch that video. And as I always say, guys, I'm only going to be doing fundamentals in these Sunday study sessions anyway. The real meat on the bones you're going to find in the WOW sessions, you know, but here we're just going to kind of get you acclimatized and get you up to speed a little bit quicker. Okay, so first is that price has gone down. Second is that price has started at 1.41527. Third is that price has finished at 1.41423. Yeah, so you can see where price started and where price finished. Conversely, if you look at the white candle next to it, this candle has gone up, remember? Yeah, black means price has gone down, white means price has gone up. So this candle has started at the bottom, which is 1.41421, and it's gone up to the top, which is 1.41643. Okay, so we can see that price has gone down here and price has gone up here. Can I zoom in any more than this? Yes, I can. Excellent. Okay, there are two other pieces of information that we get from a candle. We've got three so far: which direction it's gone, where it started, where it finished. The third is how high price went during the session. What is a session? I'm going to come back to that in just a second. How high price went during the session. Now, this particular candlestick does not have a wick at the bottom. Yeah, it only has a tiny little wick, but you can barely see it, so we're going to ignore it. Unlike this one, for example, which has got a long wick at the bottom, but not really much of a wick at the top. Yeah, that happens sometimes. A small wick at the bottom, not much of a wick at the top. A bit of a wick at the top, not much of a wick at the bottom, right? Either way, the wick at the top tells you how high price went during that particular session, and the wick at the bottom, or down here, for example, tells you how low price went during that particular session. Okay, so while this candlestick here was being formed, in fact, let's use the one next to it, because that's a nice, interesting candle. Okay, so while this candlestick here was being formed, we can see that price started at the bottom and it went to the top. Yeah, we can see it's a white candle. It started at the bottom of the body and went to the top of the body. Okay, but before it did that, price actually went down to the bottom of the wick, right? Touched this level and then has gone all the way up to the top of this wick, touched that level, and then come back, and this is where it has finished. So we know where it started, we know how low it went, we know how high it went, and we know where it finished. Let me just do that again, but with these lines here. So we know where it started, we know how low it went, we know how high it went, and we know where it finished. Is that making sense to everyone?
Yes,
Yes.
it is.
Yes.
Yeah?
Yes.
Yes.
Brilliant. Okay, that's the 5 pieces of information that we get from each candlestick. Okay, we know where it started, we know how high it went, we know how low it went, we know where it finished. Okay, now the reason that we're looking at this is because these candlesticks tell us stories. Okay, each candlestick tells us a story. These candlesticks are representations of people's energy. Do you know what I mean? People are thinking, people are afraid, people are greedy, whatever the reason is, people are putting their money in and it is being expressed as these candlesticks, okay? And the more you study the candlesticks, the more you start to understand that there is only a limited amount of things they can do, right? Let me show you, hold on. Let's swap and go to here. Right, let me just spin it this way. There you go. There's only a limited amount of things they can do. If a candlestick, let's say we've got 1, 2, oh, actually, no, I've done that wrong. Hold on. Let's go from here. 0, 1, 2, 3, 4. 1, 2, 3, 4. So let's say a candlestick starts here, right, at 0. And immediately, while the candlestick is being formed, right, it starts going up. And then, right, it changes its mind and it actually starts to go down. So remember, the candlestick started here. That does not change. But now the candlestick is going down. So how do we know how high the candlestick went? Well, it will have a wick to tell us. I did come this high, by the way. Do you know what I mean? I did come this high, but now I'm over here. So let's say now the candlestick pulls back and this is where the candlestick finishes. Yeah, but it will say, oh, I did actually go this low. I did go this low. I did go this high. This is where I started. This is where I finished. Hold on, let me doing X instead. This is where I started. This is where I finished. Yeah, those are the 5 pieces, 5, and I went down ultimately, so that'd be a black candlestick. Those are the 5 pieces of information that we'll get from each candle. But each candle tells us a story, right? Because obviously, as I said, we can see these patterns are forming. So if, for example, we are in the middle of a downward trend, yeah, let's say we're in the middle of a downward trend. Price is going, let's draw some candles. Price is going down, 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 right? And then we see this candle with a long wick at the bottom, but it's a white candle. What is the story that this candlestick is telling us? Well, we know price started here at the bottom, yeah, which is where this black candle finished. So this candle started at the top. Hold on, let me do this in red because that'll make that a little bit easier to see actually. So this candle started at the top, finished at the bottom. This candle started at the bottom, went all the way down here, and then was pushed all the way back up until it finished as a white candle. Now that is a suggestion. That is a suggestion that the chart pattern is about to reverse. This particular candle is called a hammer, H-A-M-M-E-R. This particular candle is called a hammer, and it is an indication that the market is going to reverse. Now, when I say indication, it's not a guarantee. It's not just because you see this candle that all of a sudden you should start putting all of your money into this trade because you know for a fact this is the hammer and this is the best candle. That is just not how it works, right? It is an indication. When you're trading, what you're looking for is confluence. So you're looking for good market structure, yeah, to prove this, yes, price is likely to reverse somewhere around this level, because market structure suggests that market structure, last time we got to this level, we reversed, last time we reversed, and now we've got a hammer, right? Looking good. Does that make sense? So we wanna be waiting for market structure. It's not just because we see the hammer that we're jumping in. But this candle indicates that the next candle should also be heading upwards, right? The next candle, because now there's a lot of pressure from here to here. There's a lot of buyers in the market, right? So the next candle should continue in that direction, right? And even if it doesn't, what may happen is price might drop a little bit, and then before it hits the bottom, it might then continue upwards. Now, what I do personally when I'm entering a trade, say for example, this was my indication, my entry point, right? I would enter the market here and my stop loss would be just below this candle. So if the market comes and hits then I'm out the trade. That's me. That's how I would enter the market. I would put my stop loss below the signal and I would manage my risk because I know, okay, how many pips? 1, 2, 3 pips, or let's say 30 pips, 10, 20, 30 pips, right? I know, okay, so if I enter at 10 pence a pip, I'm risking £3. If I enter at 20 pence a pip, I'm risking £6. And I can do that math based on this candlestick. This is my entry point, okay? Is there anybody that is not making sense to? Is there anyone who doesn't understand the story of this candle? Everybody understands the story of this candle. Excellent, brilliant. So if I were to ask later on somebody, if I were to draw this candle and ask for a volunteer to explain it, is everyone confident they can explain it? Yeah. If not, then just say I'm not sure. I don't mind. We're here to study. This is Sunday study sessions, right? So is everybody confident that they understand the story behind this candle, the hammer?
Well,
Sure.
Sorry, I got two of you at once there. Say again. Sorry. Hello.
Hello.
Yes, sir. Did you say you're sure or you're unsure?
I'm unsure.
Unsure.
I just
unsure.
joined
No
in.
worries. Oh, okay. Okay, I got you. All right, I got you. So I'm speaking about this candle specifically. We've discussed that each candle gives us 5 pieces of information, right? So we know where the candle starts, how low it goes, how high it goes, and where it finishes, and ultimately which direction it goes in, right? So we're saying that each of these candles then tells us a bit of a story. Each of these candles carries an energy with it. Even this candle is telling us, you know, look, I'm on my way down, I'm on my way down. This candle, I'm on my way down, I'm on my way down, I'm on my way down. But then this candle has come and reversed the story, right? Suggested, sorry, because again, there are absolutely no guarantees in trading. And you would need to understand a little bit more about time frames as well in order to really maximize this. I'm going to try and cover that before the session is over as well, okay? But what this candle is suggesting is that while price was falling, okay, because the sellers were pushing the market down, yeah? The buyers, the people who want to buy, were waiting at the bottom, right? They were waiting for a strong support level, right? They were waiting for a strong support level where there's loads of buyers. They were waiting for this level. The sellers were making their money. The sellers are laughing. Yeah, they've won. In fact, a smart seller would probably close his trade at this point because he knows, you know, that's it now. We've hit a strong support level. I'm sure loads of buyers are now going to come into the market. So what does it look like when all of those buyers come into the market? Well, the candlesticks give us patterns, you know, that we can use as indications that help us to understand this is likely what is happening right now. This one in particular is called a hammer. And again, the story that it tells is that price started here. It tried to go down because bear in mind, we're looking at this in the context of it being at the bottom of a downtrend. Yeah, in the context of it being at the bottom of that. If this hammer is up here, it doesn't mean much, right? If it's not at a strong resistance level or support level, sorry, then it doesn't mean too much, right? So it's telling us that price started here as we would expect it to. It was pushed all the way down as we would have thought it would have, because at this point, it was a big black candle, wasn't it? Yeah, so it was pushed all the way down. And then the buyers have entered the market and pushed price from here all the way up to here, to the point where this candle has finished as a white candle. Yeah, so now the buyers are taking control of the market. That's what we're seeing here, right? It looks to us like the buyers are now taking control of the market. That is called a hammer. Okay, there is well, actually, do you know what? I shouldn't have done that because now I've got to, can I do it? No, I can't do it. Because now, yeah, there is another version on the other side, which is an inverse hammer. Let me make sure I've got this right. So it starts here and it ends as a black candle, and it's got a long wick going up. Yeah, that one there is called an inverse hammer. Sorry, guys. I'm sure you can you can make that work. Yeah, as an inverse hammer. Again, it tells us the same story. Can you guys see the story that the inverse hammer is telling us right now?
Yeah, we go to opposite way.
Yes. Yeah, the opposite.
Yeah, exactly. You can see the story that it's telling us. Now, again, remember, I can't stress this enough, okay? These are not guarantees. These are indications, right? The candlestick is an indicator. The candlestick is saying, okay, look, this is what is likely to happen because this is what happened during the last session. What is a session? Let's talk about that. What is a session? No, I'm going to close it because I don't like that thing on the right hand side. And let's just jump back in again. Were we looking at GU? Okay, what is a session? So these numbers right here, M1, M5, M15, M30, we're not going to go too deeply into time frames because we've spoken about time frames, and we do have another session where we delve a little bit more deeply into that. Today, I want to talk to you about some candlesticks. So I don't want to, use up the time that I've got I want to respect your time. Do you know what I mean? I don't want to use it at a time that I've got talking about anything other than candlesticks if I can help it. But I'm going to run through timeframes briefly for those of you who don't know what they are. Okay, so MN stands for 1 month. So if I press MM, what that means is each one of these candlesticks represents 1 month. Okay, so literally January, February, March, April, May, June, July, August, September, October, November, December. Yeah, 2020. And if I move along to 2021, January, February, March, April, May, and June, which is where we are right now, right? So on this monthly chart, MN, right, one session is 1 month. One candlestick represents 1 month. So this candlestick here would be 1 month. It would take 1 month to form this candlestick, right? Cool. On the weekly chart, W1 is weekly. So each one of these candlesticks represents 1 week. And obviously 4 candlesticks would represent 1 month, right? Because it's 4 weeks in a month. Or you've got the D, the daily one. Okay, so each one of these candlesticks now represents 1 day. And 5 candlesticks represents 1 week. Yeah, 5 candlesticks, because as you can see, the market is not moving now because it's a weekend, right? Or the hour 4, where every candlestick is 4 hours. The hour 1, where every candlestick is 1 hour. All the way down to the minute 1, where every candlestick is 1 minute, right? In any case, in any instance, the candlestick is representing the time frame that you choose. Okay, so the candlestick, a session, is the time that you choose. So the reason I'm telling you that is because obviously if you are looking at this particular candlestick, which is an indicator, let's say you're at a strong resistance level and you see this candlestick, it is an indicator that price could continue down. However, if you see this on a 15-minute chart, right? And if you look at the daily chart, you can see that we are on the way up. Yeah, we've just hit this, and this is where we are right now, today. This is today's candle. And you see this here. It doesn't mean that all of a sudden the daily chart is going to start reversing. That's not what it means. The larger time frames are in control here. Yeah, if the larger time frame says go up, we go up. If the larger time frame says go down, we go down. Okay, so if you see an indicator on a larger time frame, then that is an indication that you can start looking for entries on the smaller time frame. Does that make sense to everybody?
Yes, it
Yes,
does.
yes.
Yeah, excellent. Brilliant. I'm glad to hear that. Thank you, guys. Is there anyone that didn't make too much sense to you?
I've just to rehash. Let me just rehash to make sure I understand, Nate, if you don't mind.
Sure, go on, King. Yeah.
Right. So you've just had a look at the 1-day charts, and the candle is showing you that it's probably going to be a bull run, a buy. Yeah. So what you're saying is, if you go to the 1-minute candle chart, you probably want to look out. You want to enter for a buy, correct?
Not quite. I wouldn't say go all the way down to the 1 minute to enter for a buy. I would personally say anything from hour 4 on the left, H4, D1, W1, MN, anything from hour 4 and above, I use that to analyze the market. So I'll look at the monthly and I'll be like, okay, look, I can see that we should be at a strong resistance level and price should go down. Yeah, so up, down, up. We've just hit this level. I'm expecting down, right? But I'm not expecting that to happen on the monthly chart. I'm not expecting that to happen for the next couple of months. How many months is it going to take for this chart to go down? Yeah, so I'm not rushing. And then I'll look at the daily chart. Okay, look, I can see we started going down. Yeah, you know, if you were prudent, you might have found an entry somewhere up here and you'd be riding this down because as we saw, we can expect it to go all the way down, right? I would be looking, I'll be using up to hour 4 to look for strategy, and then hour 1, minute 30, minute 15, maybe I'll be looking for my entry. depending on whether I'm trading based on like just for the day, or if I'm trading just for, you know, or if I'm trying to catch a long-term trade, if I'm trying to enter a trade for a couple of months, or if I'm trying to enter a trade just for the day, you know, it really depends. But I need to be aware of all time frames so that I can get a complete idea of the picture. But I wouldn't really go down and trade on the 1 minute for anything.
Okay, thank you, Nate.
Yeah, no worries, Ken. Yeah, personally, I wouldn't really use, me personally, I wouldn't use the 1 minute. Maybe if you're
save 1
trading
minute for
nitro
buying the
effects.
options.
Yeah, exactly. There you go. Excellent. So again, I would say anything above H4, you want to use for your strategy, because H4, if you see a, let's say for example, H4, let's say you see a candlestick pattern here, right? Then you can trust, if it is here on the H4, then it will likely be a great opportunity for you to enter on the H1. Yeah, it will be a good opportunity for you to enter on the H1. If it's there on the H4 and you can find it on the H1, then that would be great, right? For example, let me see if I can find an example. Hold on. Okay, so the H4, each candlestick is 4 hours. Okay, 4 hours. So think about it like this: from midnight to 4 a.m., from 4 a.m. to 8 a.m., from 8 a.m. to 12 noon, from 12 noon to 4 p.m., from 4 p.m. to 8 p.m., from 8 p.m. to 12 midnight. Yeah, so there are 6 candles in one day. 6 candles in one day. Yeah, and all of these candles here make up 1 week. Yeah, so Monday, Tuesday, Wednesday, Thursday, Friday, right? All of these candles here make up 6 candles, 6 candles, 6 candles, 6 candles, 6 candles. Say again, sorry. Oh, sorry, I think you're not on mute, you know. Hello? Sorry, Justin, can you mute this person, please, for me? Thank you, bro. Lovely. Okay. All right. So we can see here, for example, this is this week, and I want to show you something from last week, if I can. Okay. Now I've only shown you one candlestick type. I want to show you another candlestick type. Let me see if I can do it here first. Let me do it here first. Scroll down a little bit. Oh, okay. That's what I'm doing wrong. Okay. Yeah, we've got another in fact, no, do you know what? Let me just wipe out this old one because you guys don't need it, right? Because you've been taking notes and you don't need these anymore. You know what you're looking for. Brilliant. Okay, another candlestick type, one of my favorites to look out for is this one. So let's say, for example, okay, let's say price is climbing up a trend line like this, right? And it goes up. It goes up. Oh, that was a mess, sorry. It goes up, then it starts to come back down. Then it starts to come back down. And then from here, it shoots up, right? Okay, that wasn't a very good, do you know what I'm gonna do? That's what I'm gonna do. There you go, right? Now, these two candles next to each other, okay, are what are called an engulfing candle. An engulfing candle. Okay, what is an engulfing candle? I'll show you in a bit of a neater context. There are 2 ways you can have an engulfing candle, one going up, one going down. But again, you only really want to trust an engulfing candle when you see it at a strong support level or resistance level. Yeah, if you just see it in the middle of nowhere, if you see an engulfing candle here, it doesn't mean much. Yeah, it could mean that price is going to go up. It could mean that price is going to go down. I wouldn't personally enter the market. I would say that's a good time to be patient and wait for the market to come to, wait for the market, oh gosh, wait for the market to come to you. Yeah, wait for the market to come to you. You can see the market's on its way up, it's done the move, fair enough. Be patient. How long is it going to take for the market to come down here? Who knows? Who cares, right? Wait for the market to come to you. And then what happens next? The market drops down, gives us the black candle, and then the market shoots up, gives us the white candle. Engulfing candle, perfect, brilliant. Now let's enter the market right here, yeah? What is an engulfing candle? So in one of two forms, you've either got a small black candle and a big white candle that is more than double the size, or you've got a small white candle and a big black candle that is more than double the size. Yeah. When you see these two candles together, right? When you see them together, they are called an engulfing candlestick pattern. Yeah, that is an engulfing candlestick pattern. When you see these two next to each other, okay? So case in point, I'm going to show you this on the hour 4. Hopefully I'm looking at this correctly, actually. Now, again, you can spot these all over the place, by the way, guys. Do you know what I mean? These candlestick patterns that I'm showing you, they're not rare. And this is why I'm saying you don't just want to see them. You want to look for them in appropriate places. Like, for example, this here would qualify as an engulfing candle, but look where it is. You know, it's not really at a strong support level. You know, at first glance, it doesn't appear to be at a strong support level, right? So we're looking at the hour 4, and I spot here this engulfing candle, which we could argue is at a strong resistance level. Okay, if you don't know what support and resistance are, then I would strongly recommend keep coming to the Sunday study sessions until you feel confident in that, right? Because it is something that we've covered before, and it is something we'll cover again. But again, today, the focus is on candlesticks. So if you see this particular candlestick at this strong level, right? So this would have been about Friday, do you reckon? Yeah, because we're in the hour 4. So 6 candles is a day. So we've got 1, 2, 3, 4, 5, 6. Yeah. So that would have been basically the Friday, right? Of last week, not of last week just gone, but of the week before, right? So what I'm going to do is I'm going to swap to, now let's say I'm looking at the hour 4. Remember, hear what I'm saying. It takes 4 hours for this candle to form. In fact, for the 2 of these candles to form, takes 8 hours. This is what I mean when I say patience. Yeah, it's not a rush. What are you rushing for? Do you know what I mean? It takes 8 hours for these 2 candles to form, right? So I've seen this happen. Now, I could just jump straight in there. Brilliant. Do you know what I mean? If I wanted to. Or I could go to the hour 1 time frame now. Okay, so let's count back the days. Now, on the hour 1, there are 24 hours in a day. So in between each of these dotted lines is a day. Yeah, so we've got Friday, Thursday, Wednesday, Tuesday, Monday, and then this would have been the previous Friday. Oh, this would have been the previous Friday. Yeah, so this was when it dropped. Is that right? Have I got that right? Yes, Friday. Yeah, Friday. So this was when it dropped. Lovely. Okay. So brilliant. As soon as it's dropped, now we've come into the smaller time frame, and we're looking for an entry. Again, we can see an entry even here. Brilliant. You know, we can see quite a few entries. Again, I'm using the same engulfing candle stick pattern. But hopefully you guys are getting my point, right? You come out and look on the larger time frames for your strategy. Let's say you were looking at the daily chart, you know, and you were to see, here's a good example. This is the example that I usually use. And you were to see this engulfing candlestick right here. Okay, now this is on the day. So now, you know, you're not going to enter this chart on the day. Why not? Because if you're managing your risk, which we spoke about last week, then the amount of pips that you would lose based on a day trade, unless you had loads and loads of money to spare, right? Unless, you know, you have plenty of money to spare, it wouldn't be worth entering a trade like this at 10 pence a pip, you know, because if you enter the trade like this at 10 pence a pip, then it's possible that you could lose, I don't know, I haven't done the math, but, you know, it's possible that you could lose like a good 50 quid. And if you've only got like 100 quid in your account, then it's just not worth it on a trade like this, you know, even though this is a great opportunity. Look, engulfing candle, brilliant. Look, you know, it's there, it's clean. That doesn't mean that you should just jump straight in, because obviously if you're going to manage your risk, then you're going to set your stop loss all the way up here, And if by any chance the market goes up here and taps your stop loss, then, you know, hold on. Case in point, yeah, then you're going to be in trouble, especially if you've only got a small account. So, you know, you definitely want to really be looking at the hour 1 to kind of catch your trade for the day, or looking at the hour 4 to kind of catch your trade, to kind of just know what you're looking for, to kind of study the week. For example, right, I don't know how many of you guys have done this yet, but I would recommend picking one currency pair, whichever currency pair you want. Yeah, whichever currency pair you want. Let's say Euro JPY, right? I've not looked at this one. And saying, okay, so hour 4 tells us what happens each week. Yeah, there are 6 candles in a day, and in between these dotted lines is our week, right? So you could be like, okay, what's going to happen with this particular currency pair next week? What do you think is going to happen? Well, I don't know. Am I in a rush to jump into a trade? Of course not. Why would I be in a rush? Let me have a look and zoom out and see what's the monthly saying. Okay, monthly is telling us this. Look, this month is starting to drop down, but we are at the bottom of it. We are at the top of an uptrend. Interesting. I'm going to be looking for support and resistance levels. Now I've got an idea of what the month is saying. I can zoom in and look at the weekly chart. I can see last week was a massive drop. You know, and I can say, I think it might continue to drop. Or I can say, I think it might go back up, right? I can watch this for the next 2 or 3 weeks, guys, the next 3 or 4 weeks, until I am completely confident that I know what it's going to do. And then once I know what it's going to do, I am now making money. Do you understand? But it starts off with the patience. It starts off with the, okay, let me watch this. The best advice that I think I've heard is to pick a currency pair and just marry it. Yeah, just think, okay, what's it going to do for the next week? Look at the daily chart. Okay, there are 5 days in a week. So 1, 2, 3, 4, 5. That's what happened last week. This is what I think is going to happen next week. Just watch and learn and wait. Do you know what I mean? Just study it. Look at how it bounces off of support and resistance levels. Look at the candlestick patterns. And while you're watching, obviously continue to learn, continue to study more candlestick patterns, right? And then obviously, you know, when you're confident, look into the smaller time frames and try and find yourself a great entry point. You know, you can sniper your entry based on an hour. Do you know what I mean? You can catch a nice entry there, and then when you zoom back out onto the daily chart, you'll be right on the wick, you know, of the chart, because you zoomed in to a smaller time frame and you found a great entry point. Is that making sense to everyone? Let me know if I was going a bit fast.
Yes.
Making sense.
Yes.
Yeah? Okay, lovely.
Yeah.
Okay, brilliant.
Yeah, it is.
So we've excellent, fantastic. Is there anyone that's not making sense to you?
It's making sense, bro.
Yeah, it's making sense. Oh, wicked. I'm glad to hear that, man. Okay. Each candlestick tells us a story. Every single one. Okay. There are tons of them. I didn't get to go through as many of them as I would have liked to today. You know, there's this one, which is called a bold candle. A bold candle doesn't have any wicks, no wicks on a bold candle. Yeah. And that tells us that price is going to continue going down. It's a strong candle. It's massive compared to the other candles. You know, a bold candle is enormous, right? And it's just, you know, one track minded. There's one called a hanging man. A hanging man is sort of like a hammer, but in reverse. See, this was the hammer, which is a white candle, started here, and we went up, we went down to the bottom, we bounced up. The hanging man was we started at the top, we went all the way down, we tried to go down, we were pushed back up, but ultimately, you know, we are going down, yeah? And then there is a shooting star, there is a doji. Let me show you a doji real quick. Let me show a doji real quick, so you guys can see what the doji looks like as well, because the doji is really important. So doji says we started in the middle, we went up, we went down, and we finished in the middle. Yeah, that's what a doji says. There are different kinds of doji. You've got a dragonfly doji, and you've got a gravestone doji. Each of these tell a story, guys. That's the point here. Yeah, every single candlestick out there is an indication. It is telling you something, right? And the more you look at them, the more time you take, You know, when you first start playing basketball, or you know, when you first get your car and you're out on the roads every day, do you know what I mean? Or when you first start playing basketball and the coach is telling you, listen, always bounce the ball, always hold it in your hand, always look at it. You know, if you take your studies of investing seriously, you will know how to read this chart clean in a couple of weeks, because there's not much to it. It's actually very simple to learn how to read the chart. The difficult part is how to predict the chart. Do you know what I mean? But anyone can read it, right? Anyone can read it. I've you know, shown teenagers how to read the chart. So you guys definitely can and will pick it up, especially if you keep on attending these sessions. But what I need to enforce, that's the wrong word. What I need to stress is that these sessions are not the be all and end all. They are not the point. They are not what we're here paying for. Hold on, no, I am still going to share my screen. That's what I'm going to think here. These sessions are not what we're here paying for. Okay. I cannot stress enough, guys, that this is where the information is at. Okay, so all I'm ever going to do in these sessions, you see, we spoke about 2 candlesticks. We spoke about the engulfing candle, and we spoke about the engulfing candle, and we spoke about the hammer, right?
The hammer.
Yeah, thank you. Brilliant. Well, here we have got tons of information. Yeah, if you go right down to the bottom and hit educators, pick an educator. Yeah, let's say Justin. Okay, fantastic. And then scroll right down to the bottom, because obviously Justin does live sessions. So if Justin's not live right now, that's fine. We're going to scroll down to the bottom and we're going to see his recent streams. Yeah, and you can see, look, he's got videos there explaining how to read the chart, how to mark the chart, market structure, Forex basic. Yeah, that's what he's showing us. You know, how to look at that trend line there. Yeah, and he's saying, look, this is how you measure it inside the wick. You know, he's showing us how to manage your risk. You know, this is what you can expect from the trade. This is how much you should be willing to risk. This is where the information is. And there is so much of it. Look, show more. There is so much of it that it literally, I can't tell you guys enough that this is where you should be. This is what you are paying for. And it's not just Justin alone. It's not just Justin. No. Scroll to the bottom, educators. Let me pick Jeff. Okay, Jeff, what's Jeff got for us? Okay, Jeff's going to be live in 1 day, 23 hours. But look, Jeff's got plenty of recent streams as well. Yeah, every single week, Jeff is doing multiple live streams where they're educating on this stuff every single week. They're doing multiple live streams. This is what we're paying for. This is where we are going to learn, right? However, what I'm hoping to do with these Sunday study sessions, as I said, is literally just to give you guys the bullet points, just to kind of get you guys off the ground. Any brand new starters, I'll press play. Anyone who's kind of just jumped in, anyone who's kind of just started, it's your first experience trading, you don't know what a candlestick is, you don't know what a pip is, and you're checking out, wow, this is a network marketing company, yeah? So we can tend to have potentially a higher turnover, you know, if people kind of come in and they don't get it and they get frustrated and they leave. But me, I genuinely believe that this information is life-changing. Like, I really believe it is currently changing my life, yeah? So I really believe it's life-changing. I really believe it's something we should all share. And therefore, Sunday study sessions is my way of, again, taking newbies, taking beginners through the beginning, through the fundamentals. There you go. So if you guys bring anyone else in the company and there's anyone else that, you know, you think they would benefit from catching the fundamentals, then let them know that we study together. Do you know what I mean? Let them know that we learn together every Sunday. I think it could be a really good USP. It could be a really good you know, way of kind of letting people know that we've got a family environment here, you know, like a team environment. We're all here, we're all trying to help each other. And as well, it doesn't have to be me that hosts the Sunday study sessions. You know, any of you guys, if you want to host a session, you can shout me and, you know, say, this is what I would like to do a session on. I want to help the new people learn this. I'll be happy to, man. Listen, I'll take a day off. Albert's helped me with a couple of them. I've loved them. I've enjoyed watching them. You know, and Albert's definitely my go-to guy. I don't know if you're in the room, Albert, but thank you, bro, if you are. Albert's definitely my go-to guy. I will always there to help, always, you know, available when I need him. If any of you guys want to, then just let me know. Let me know the intent is there. The platform is here. Yeah.
Yo, bro, I'm here.
He's like, yeah, come on, King. Good to see you, bro. Yeah.
The
Good
sauce,
to see
man. The sauce was really good, man. Thank you very much for today. Thank you.
Oh, you're welcome, bro. Thank you. Thanks. Brilliant.
Thank you,
No worries, Brian. Thank you, bro. Does anyone have any questions before we wrap up? Has anyone got any questions that on the subject of candlesticks that you guys need me to kind of just run over before we wrap up?
Yes, please. I have it.
Yeah, go on, King.
So you were stressing on that if you see something like an engulfing candle, or where there is a morning star or a hammer, that where there is a hammer, it is not an indication, or it's not a justification that you should enter the trade right there. You probably
It's not a guarantee.
Okay, yeah, it's not a guarantee.
It is an indication.
It's an indication, but it's not a guarantee that you should go ahead and enter the trade. So please, I want to find out that what are the other technical things that you would have to use to confirm that, okay, it is safe to go or not.
Sure. Okay. So have you heard the word confluence before?
Yep.
You heard confluence, yeah? So what I tend to look for is confluence. Yeah, I tend to look for confluence. If I can find 3 things, so the market is very impulsive. Yeah, the market is very unpredictable. But there are certain times where the market is more predictable than others, right? Sometimes where the market is more predictable than others.
Show it, mate. Show it with the screen.
You want to see this? Okay, come on then. There are certain times where the market is more predictable than others. I would be looking for confluence. I will be looking for 3 things, right? Whatever those 3 things are, it doesn't make a difference as long as I have got 3 things that match up and confirm, right? So, for example, let's say, okay, here's one. So let's say I have got, could we say this counts as an engulfing candle? Not the, right, this one here. I don't know if we could say it counts as an engulfing candle. It depends actually. Is that black? Yes, it is. Okay. We could. It's not the best example of an engulfing candle, but it would do the job, right? Just for illustrative purposes. So we've got this engulfing candle here, which to some might appear to be in the middle of nowhere, right? This one, which to some might appear to be in the middle of nowhere. But if we zoom out a little bit, then we can see that it is actually, where is it? There it is. You know, on a strong level, on a strong support level. Yeah, so we can see what is support. When we do market structure, Eric, we'll cover support a little bit more, but I'm just going to show you fundamentals. Okay, we can see that price has come down and touched this red line and bounced up. Look, hold on. Look right there, you see it? Price has come down and touched this red line and bounced up, right? And then it's come down and touched this red line and bounced up again. Okay, so this would make this area, this region, this range would be like a support level or a resistance level, right? And we can see that when prices is struggled around here, then it's dropped down, it's finally broken through this level. Yeah, after a little bit of a fight, it's finally broken through this level. And then it's tried to come back up. It's touched this level again, right here, and it's been pushed back down, right? And the same again, and it's been pushed back down. It's finally broken through, and then we have this engulfing candle right there, okay? So now I'm a little bit more confident, but I'm still not 100%, but at the same time, I have 1, 2 forms of confluence. Yeah, it's not just one thing by itself. Now I can see 2 things, and I'm like, okay, That's giving me more confidence. Yeah. So now I'm feeling a bit more confident. I'll be looking for a third thing personally. So for me, it's usually an indicator. Like I'll normally go for the moving average, for example. Let's say the 50 moving average. What's that saying? How's that looking? Okay, probably not the best one for that example. Let me see if I can switch it to the 20. That might make a bit more sense. No, even that. Oh gosh. Okay, well, again, that particular strategy wouldn't work with this trade, right? But I would be looking for another indicator. I'll be looking for another indicator. And once I've got 3 different indicators, I'd feel more confident. As you can see with this red line that I've just put on the moving average, this is one of my favorite strategies. You can see that whenever price touches the red line, it kind of reacts. Not all the time, sometimes it breaks through, but that's because this particular red line is a 20 moving average. There's also like a 50 moving average, 120 moving average, a 200 moving average. There's a lot of moving averages. We've not spoken about indicators in this session before, and it's not something we're going to cover. But this is one of the strategies that I use. So you can see, look, it's come down here, it's come down here, and as soon as it's touched this line, brilliant, right? So while I'm looking at this engulfing candle, where's it gone? This engulfing candle that we kind of picked out, right? I would be looking for, to see that it's at a resistance level. It is a support level, sorry. It is an engulfing candle, and it has a third form of confluence. Maybe the what's the other one called? Hold on, let me see if I can find it. The where is it? What's his name? He's a mathematician. You got the MACD. That's not what I'm thinking about though. So I think you know what I'm going to say. I can't find
Ikimoku.
Not Ishimoku. No, not the Ishimoku cloud. He's a mathematician, and he done the ratio, and every plant has
Fibonacci.
Fibonacci. There you go. Thank you for that. Yeah, you could. Where's Fibonacci, please? Am I looking in the wrong place? I'm looking at indicators. But Fibonacci might help. Or the MACD might help. Or the moving average might help. It depends on what you choose to use as your third form of confluence. Yeah. But the first thing that you want is market structure. Market structure is number 1, in my opinion. Number 2 is the candlestick pattern. The candlestick pattern confirms the market structure. That's number 2. So by the time you see the candlestick at a strong level of market structure, you're already more confident, right? Let me see if I can find a better example. I know I can find a better example if I go to GU, because this is where I normally stay. Let me get rid of this as well, actually, because thanks for your help. So let's look at month. And in terms of market structure, okay, just for example, we can see that this on the monthly chart, which is the biggest chart there is a strong level. Bounce, 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 broke through, bounce, bounce. And this is where we are right now, okay? This is where we are right now. That is on the monthly chart, where each candlestick is a month. So if I were to zoom in now to the daily chart, we know where we are in terms of GBP USD. We know what's going on. Yeah, we know GBP USD has just hit a strong level and a strong resistance level. Can you see that? Let me just make sure you can see that. Hold on. GBP USD has just hit a strong resistance level. Is there anyone who can't see that?
You can draw it with that's right.
There it is. Can anyone see that? Yeah. GBP USD has just hit a strong level. Yeah. Every time it hits this level, it reacts. It has just hit this level. We should be expecting a reaction. Price might continue upwards. Don't get me wrong. It could go up. Yeah. But at the same time, the fact of the matter is, it has just hit this level. We are expecting a reaction. Yeah, that's clear to everybody, right? 1.41 is that level. It's just hit this level on the monthly chart. We are expecting a reaction. Okay. Now I'm going to zoom into a smaller time frame to look for a candlestick pattern. And look, as I showed you guys earlier, we have our engulfing candle right there. So now I know, okay, boom, price is going to go down. Now, obviously, price has come back up since then. Oh, price has come back up since then and has dropped down again. We've got another engulfing candle here, you know, but it's not the best. It's not, you know, like at the strongest. It's not the strongest. We've got one there. Does that count as an engulfing candle? I'd say yes, personally. But then that's because I'm looking for it. I'm looking for an engulfing candle. This here as well could also count as an, hold on, let me zoom in a little bit. Oh. This here as well could also count as an engulfing candle. But I wouldn't count it because this engulfing candle is suggesting that price is going to go up. And it is at a strong resistance level. It's not at a strong support level. There is no support here. Yeah. If we zoom out again, we remember that we are at the top. We're at 1.41, where the market is now about to go down. If we look at the monthly chart, we see that again, yeah? That's where we are, 1.41. So when I'm looking at the daily chart here, I'm not expecting to see price going up. I'm looking for an opportunity to sell, right? And if I see this, I'm kind of going to ignore it. If I see this, I might chance it. I'll enter the trade. I'll put my stop loss here and I will manage my risk. That's it. That's all there is to it, Eric. That's it. Do you know what I mean? Like I'll see this, I'll enter here, I'll put my stop loss up here, and I'll manage my risk. I'll make sure I don't lose too much. I personally probably wouldn't enter, well, I might do actually. I'd have to count the pips because I'm not sure how much that is. 1.4215, 1.4161. Okay. So we've got 160 to 210 is 40, is about 60 pips. Okay, it's about 60 pips. So that's about a 60 pip stop loss. It's not ideal for me, but at the same time, it's not the end of the world. You know, if I'm feeling cheeky, I might even try and jump in on this candle here a couple of days later because I'm still reading this candle and thinking, right, now price is going to drop any second. Look how long it takes before price drops. Look how long it took, how many days it took. You know, this was the beginning of the month and this is today, finally. Do you know what I mean? Price has been dropping for the last week, right? But for the first week and a bit of the month, price was in consolidation. It wasn't dropping. So yeah, you know, that's basically what I would do. I would say one, I'll be looking at market structure. And then two, I'll be looking at the candlestick to confirm what I believe is going to happen to give me like a good entry point. And then three, I would be looking personally for a third form of confluence. And the reason for that is because I don't generally trade on the larger time frames if I can avoid it, because I'm not, my account's not big enough for me to, you know, they're struggling like 10p a pip on a monthly chart. You know, it makes more sense for me to look at the daily chart and be like, okay, price is now going down. Yeah, we know price is going down for the next few thousand pips. Do you know what I mean? So now I'm going to be looking for opportunities to sell. So I'm waiting for this to come bounce back up and then start dropping and then give me another indication it's going to go down. What would that look like? Let me just show you. That would look like price is going down, right? So that would look like price going down, 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 and then hitting this level here, for example, bouncing back up, maybe up to this level here, and then giving me an engulfing candle. Yeah, and now I'm going to enter the market again and catch more trades. Do you know what I mean? So that's what that would look like. It would look like price coming down to here, bouncing back up, and then dropping down again. That is a downtrend. And I'm riding the downtrend all the way down, and I'm making money every opportunity I can find. But again, I'm looking for a third form of confluence, because if I did that and I, you know, this could happen. Oh, this could happen. You know, where I enter thinking the market's going to go down, and I stay in my trade too long, because look, if I'd entered this trade, I could have made some money, yeah? But instead, I wanted to go all the way down to the bottom because it's 2,000 pips. And look what's happened. It's pulled back up and I've not earned anything. Now, when I could have just earned this money instead, I was waiting to catch all of the money. I wanted to go all the way to the bottom. And that's a lesson that I've learned, you know, instead of, for me at my level, instead of me trying to jump in at the top and catch all of these pips on the way down, maybe I can do it, maybe I can't. But I'll tell you what I can do. I can catch about 5, 6, 7 trades on the way down. And I'm confident in my ability to do that. Do you know what I mean? So I'm just going to watch it go down, wait for opportunities, find my free forms of confluence and jump in. If I miss a trade, then it's not that deep. There's always another trade. Do you know what I mean? Just wait for it and be patient. Another trade will come up and then just wait until you get it right, you know? And when you do jump into the trade, manage your risk. If you, again, I strongly want to say, guys, if you haven't done the risk management, watch last week's video, because last week's video was really, really good on the subject as well. Today's focus has been candlesticks. If there's one thing that I want to say about candlesticks, one kind of rule that I normally apply is obviously when you see a candlestick, you can't enter the trade while the candlestick is being formed, right? It doesn't make sense. You can't really enter the trade while the candlestick is being formed. Let's say you're looking at the hourly chart, right? And you are waiting for this engulfing candle right here in the middle, right? You're waiting for this one right here, yeah? So obviously price does go down, further down, brilliant, but not straight away. First, it comes up a little bit, right, up to here. So this is what I do as a general rule of thumb. Obviously, I'm waiting for this because this might not be an engulfing candle. This could be a white candle and then a big black candle. And then in the last second, it changes its mind and becomes a small candle and with a long wick. It's not an engulfing candle anymore. But there's me, I've entered the trade like a mug. Do you know what I mean? And that's it. I've lost my money. I'm out the door. You know, because it wasn't an engulfing candle, because I wasn't patient, waiting for the candle to finish. So I'm going to wait until the end of this hour for this candle to finish. So if it's 4 o'clock, I'm waiting until 4:59 and I'm watching the chart. Boom, okay, this chart is about to end. Will this be an engulfing candle? Yes, it was an engulfing candle. Excellent. Now I'm going to enter the market. So I'm going to enter the market really when this candle starts forming at the top of this candle. Yeah, is where I'm going to enter the market. Or if I wanted to be cheeky, you know, I might wait for this little move here and jumping up here. That would be brilliant. You know, that's the best move I could make. But for the purpose of what I'm saying, if you enter the market here, then your stop loss really wants to be just above the engulfing candle. Because if this candle was a false signal, if this candle's incorrect, then price will come up and touch that and then close your trade. Fine, it is what it is. It happens to everyone, right? If this candle was correct, then price will continue downwards and you're laughing. Brilliant, and you've made your money, okay? The important thing is that you manage your risk. Remember, we don't choose where to put our stop loss. The market dictates, the market tells you, yeah? If you say, oh, I only want to do a 10 pip stop loss, for example, then your stop loss might be, if you only wanted to do a 10 pip stop loss, then your stop loss might end up being here. Do you know what I mean? And you get tapped out in no time at all. So you don't really just want to set a rigid, okay, I'm only going to do a 10 pip stop loss because that way I know, worst case scenario, I'll only lose £10. That's not how it works. That you'll just keep on losing money that way, unfortunately, guys. Right? What you want to do is you want to use the lines that the market has given you, use the market structure that the market is giving you. You can put your stop loss here, or you can put your stop loss up here, because you know if price comes up, then it will have to break past this level of market structure. It will have to come up and it will probably bounce and go back down. Do you know what I mean? It would have to break through. And if it breaks through, then your trade was wrong. Fine, close me out the trade, hit my stop loss, goodbye. I don't want to be in this trade anymore. I don't want to lose any more money. Do you know what I mean? So if it breaks past this level, I'm out. Yeah. Or if it breaks past this level, I'm out. Right. And you can kind of choose what that is. So you can say, okay, boom, this is how many pips. Let's say this is 20 pips from there to there. I don't know. I'm just shooting a guess. I can't be bothered to actually do the math. I'm doing the math now. Look, 1389 to 1390 to 1395. Oh wow, okay. 1 month. Oh, no, it's way more than 20 pips. Okay, cool, whatever. But you can choose and you can be like, okay, boom, this is how many pips I'm willing to risk. And that means that my lot size should be whatever I can afford to lose. Yeah. And you can choose your lot size based on the amount of risk that you're incurring. Right. You can choose your lot size based on that. Again, that's something we kind of got into a little bit more last week. And I'm not trying to drag it back there. What I am trying to say is that if you're going to use a candlestick as an entry indicator, then that candlestick should be responsible for your stop loss. Yeah. And that candlestick will help you to kind of place where your stop loss should be. That's the way that I trade. That's the way that I have learned to trade. Again, guys, in your journey while you're here, you're going to learn from a lot of different traders, many of whom are way more experienced than me. Okay. But I want you to, take this on board. Yeah. If you enter here and your stop loss is up here, then you're generally safe. Do you know what I'm saying? You could be wrong. You might enter here and price goes up and you lose the trade. It is what it is. But at least you've not lost too much because okay, boom, I saw my engulfing candle. I managed my risk. I only entered at 30p a pip because that was what I could afford. And I'm in the safe zone. Do you know what I mean? If you enter here, for example, yeah, and look, it almost comes up and hits. But what happens? It goes down. Let's see what happens going forward. Let's see if that was a winning. No, boom, that would have tapped you out. And then look, it's dropped down and you're disappointed. But at the same time, there's another engulfing candle actually. So if you entered, there's another engulfing candle that I just saw. Oh, I've lost it. Yeah, I've lost it. It's gone. Oh well. Hopefully you're getting the point though. That if you manage as long as you manage your risk. Oh yeah, there it is. As long as you manage your risk, it doesn't really make a difference. It doesn't make too much of a difference, because you're going to lose £5. 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 You're going to win £80. Yeah. Then you're going to lose £5. Then you're going to lose £5. Then you're going to win £30. And as long as you're managing your risk, it doesn't matter. You know what I'm saying? Because your account will grow. It's when you try to win all of your money in one trade, that is where the game starts to fall apart, because there is no trader who trades like that. There's no trader who over leverages. There's no successful trader who regularly over leverages. Yeah. If you are over leveraging, if you're saying, right, I've seen this trade here, I'm going to enter at £10 a pip and I'm going to try and earn 30 bags in this one trade. Yeah. If you're trying to jump in like that and you've only got like, I don't know, £300 in your account, then you really are playing yourself, because the market will pull back a small 30 pips and it will close you out. Do you know what I mean? It will close you out entirely. So as long as you're managing your risk and saying, this is how much I'm willing to lose, this is it, you'll lose a consistent amount every single time. Me, I try not to lose more than £5 in one trade. Sometimes I do get a little bit, I'm like, I'm confident this trade is going to work. And maybe like Fred will post a gold trade and I'll jump in at 20p a pip. I'm risking £10 because I trust Fred. And then it will hit stop loss and I'm burning and I'm cussing Fred for the whole day. But, end of the day, it's my choice. I chose to manage to risk more than normal. Yeah. So whereas I could have just lost one trade, now I've basically lost two trades. Do you know what I mean? Because I over leveraged the team a little bit. It's even worse when you jump in at £4 or £5 a pip and you don't have that kind of money in your account. You will not last in this industry. Yeah. So you definitely want to be patient. You want to manage your risk, and you want to study these candlesticks. If you're learning to read a chart, then your candlesticks are the alphabet. Yeah, these are the fundamentals. This is the alphabet. If you're learning to read, then this is what you're learning to read. So you want to understand what each of these candlesticks means. Remember, there's a limited amount of the candle starts here. It's either going to go up or it's going to go down. It's going to have a body and it's going to have wicks. Yeah, whatever it does, it's only got a limited amount of moves that it can make. It can't go left. Do you know what I mean? It can't go any other way. It's impossible. It can only do, a limited amount of things, right? So once you understand that and you watch it and you observe it and you see it on the different time frames, and you build your confidence. Like I said, pick one currency pair and just stick with it until next week's Sunday study session. That's what I would recommend. Each of you to choose one currency pair. It could be any currency pair you want. Just choose one currency pair and stick with it until next week Sunday. And then when we come back next week Sunday, whatever it is that we learn on the Sunday study session, apply it to the chart that you've been watching all week. Yeah, and then the next week, we'll talk about something else and apply that something else to the same chart that you've been watching for 2 weeks. Yeah, and then the next week, we'll talk about something else and apply that something else to the same chart you've been watching for 3 weeks. And I guarantee you, guys, I promise you, like, you will progress. That is it. You know, consistency breeds success. Yeah, so just stick with it. Be patient. Remember that it's not, you know, it is not a sprint. Investing has always been, you know, like a lifelong game. Investing has always been something that, you know, you're investing for the future. It's not like, okay, I'm just going to dash in, you know, a couple £100 into my account and I'm going to be a millionaire. You know, of course you are. Of course you are. But only if you stick it out, only if you're consistent, only if you don't quit, only if you're disciplined. That's what I'm working on, because my discipline has been, you know, if you're disciplined, if you're consistent, if you're, you know, if you're attentive, if you study, if you keep educating yourself. I'm not saying keep coming to the Sunday study sessions. This is not about me. Send your new people to the Sunday study sessions. My hope is that every single one of you will graduate. Do you know what I mean? And not come to these sessions. Send new people here, and you lot go and watch WOW. In fact, come and teach the Sunday study sessions. Do you know what I mean? That'd be great. Yeah, but it's not that you should keep coming here and you'll learn and you'll be successful. That's not what I'm saying. What I'm saying is keep studying, keep learning, and you will be successful. There's nothing else that can come after, you know, discipline other than success. Do you know what I mean? Just keep working at it, and you'll definitely get it, especially in this space. Because in this space, we can all win together. We do all win together. Yeah, but if you don't understand how we're winning, then you'll miss the wins, and you'll be like, how is it everyone else is making money and me, I'm copying the same trade? But you're not understanding. You over leveraged and you couldn't afford to do that, and the markets buoyed you off because you jumped and you tried to bite off more than you was your share. Yeah, and the market said, nah, no, thank you. You know, and there you go. You didn't realize the trade won, but you lost. Yeah, because you didn't understand the fundamentals. So be patient with yourself. Remember, how long has it taken you to learn? Let's say right now at work, you're earning £2,000-3,000 a month. How much of your life has it taken you to learn to earn £2,000-3,000 a month? It's taken you what, 30 years? It's taken you what, 50 years? Do you know what I mean? Give yourself some time. Give yourself like a couple of years to learn how to trade. Don't expect to jump into this space and to instantly just be that guy, to be making the money that Nathan's making. Don't ever expect that. Don't disrespect the market like that, man. The market will run you, take all of your money, and then, you know, you'll cry. Other than that, guys, that's all I have to say. I'm going to crack on with my day. Thank you for coming through to the Sunday study session. This one lasted a little bit longer than usual, so I do apologize. I hope you guys got value. Eric, did I answer your question, as a matter of fact? Because that's why I was kind of going off topic. Did that make sense to you, bro? Because I want to show the screen like Emmanuel said as well.
Yes,
Yeah?
please. You did. Thank
Lovely.
you so much.
Brilliant. Thank you, sir. I'm glad to hear that. Okay. And no one else has any questions? No? Okay, brilliant. You're welcome, Elizabeth. Oh, brilliant. Good, good, good. Looking, checking the comments, making sure everyone's good.
Thank you, brother. Thank you.
Brilliant. No worries, bro. No worries, no worries. Guys, thank you. Thanks for coming through.
Thank you. Appreciate your time and teaching and everything.
Thank you, Liz.
Awesome.
Yeah, thanks, Liz. How was that, Liz? Did you feel like you picked something up? Because I know you said you got a bit of you got experience. Did you kind of did that jog your memory?
I did. Every time I study with somebody or even by myself, I am still learning, and it was amazing from everybody.
I'm glad to hear
Totally.
that. I'm glad to hear that. Good, good,
Fantastic,
good.
Nate. Thanks ever so much.
Oh, you're welcome, Kemi.
Yeah.
Thanks for always coming through.
Oh no, I mean, I learn, as she said, every single time. Good stuff. Brilliant.
Brilliant. That's what's up,
Thanks,
man.
mate. Thank
Well
you.
done, Nate. Well done. Continue to sharing
Thank
the
you.
gifts, and brother, more people in next session, right? We're gonna promote this. Blessings,
Yeah,
brother.
man.
You're doing an
Blessings,
amazing job.
blessings. Thank you. Thanks, Emmanuel. Thanks, man. Thanks, guys. Okay, brilliant. That's me. I'm out then. Guys, have a fantastic weekend. And remember, something that I'm going to start saying at the end of every single session is take action right now, okay? Immediately. When you cut off this, don't cut off this phone and switch on your TV. Try and discipline yourself. Do one thing. Doesn't matter what that thing is. Just do one thing. Even if it's like, okay, this is the currency pair that I'm going to study next week. Yeah, just pick a currency pair and say this is the one that I'm going to look at, or watch a video on Wow, or you know, write down a trading plan. Do something, but do something right now. Today is Sunday. The markets are opening tomorrow. Okay, so now is the best time. This is the calm before the storm. Gather your thoughts, collect your thoughts. You know, center yourself and be ready for the week ahead. That way you can have a productive week. If you fail to plan, then you plan to what? There you go.
Fail.
Yeah,
Fail.
there it is. There it is. I heard you all say it in your head. You know, I knew. Yeah, if you plan to, that's it, man. If you fail to plan, then you plan to fail. So this week, now, I want you to plan for next week. Prepare yourself. Pick your currency pair and study it. Mine is Euro USD, also GBP USD, because I've upgraded to 2 now. But Euro USD is my favorite. That's the one that I'm watching. That's the one that I'm preying. You know, it's done some interesting stuff last week, but it's fine because every week is a new opportunity. Do you know what I mean? So, yeah, man, keep your eyes on the ball. And I'm going to see you guys next Sunday, yeah?
Yeah. Have a good one, mate.
Thank you.
Yeah,
Thank you so much.
Thank
Have
you,
a
guys.
blessed one, everyone. Thank you,
See you later.
guys. Much appreciated. Thank you.
Thank you. Thank you. Thank you.